and both of them were oversubscribed by investors. On the bond side, the market was bullish on account of surplus liquidity. The lower than expected fall in March inflation rate to 13.34%, and generally for the same reasons adduced for treasury bills. Consequently, average yield recorded 102 basis points month-on-month record. Now let's do a bit of the weekly analysis before we go to the earnings, which we also have on our radar. Treasury bills for this week came in with mixed sentiment persisting throughout the week, even as yields declined by 5 basis points on average in the treasury bill space and advanced 10 basis points on average on the benchmark bonds. For yesterday, Friday, treasury bills for the short end, for the long or medium term end of the curve now had 3rd of January 2019, the discount rate of 12.07%. And a total value of 40.22 billion naira. That security had 94 deals. But in total, for the Treasury T-bills on that side of the FMDQ OTC markets, total deals for yesterday was 454 with a total value of 142.37 billion naira. In terms of bonds, trading in the bonds market was also negative as yields on benchmark bonds advanced 17 basis points on average due to increased selling activity from offshore players. Yesterday, on the secondary side of the markets, the investors went more for the March 2027, the long end of the curve, and the March 2036 and April 2037 securities, bringing the grand total of deals in terms of bonds and treasury bills at that side of the market yesterday to 547 and a total value of 157.54 billion naira. Now let's look at the unlisted securities market, where the USI crossed the 700 psychological mark this week to 714.44 by 3.2% margin, moving away from the 692.52 points it recorded in the preceding session. From the market capitalization, we had 484.15 billion naira, as against 468.52 billion naira recorded in the preceding week. Total volume done year to date is 857, deals is 909, and year to date value 3.68 billion naira, gradually pushing the market capitalization closer to the 500 billion naira mark for that market. For the equity market now, equities all-share index dropped lower, 0.06% this week, as the all-share index came in 41,218.72. Equity capitalization closed at 14.93 trillion naira, while total volume of all the transactions for the four sessions of the week was 1.331 billion in terms of number of shares and units of shares that investors actually dealt on. Total value was 20.83 billion naira, while total deals was 18,695. And sectorally, what we had was the that 3 of the 5 major sectors declined, and we're referring to the insurance index, the consumer goods index, oil and gas index, all falling southward, as against the banking index, which rose the most by 1.56%. And on account of the trades that we've seen in O&O and a couple of other oil and gas shares, we saw the oil and gas index coming in this week at 1.06%, putting the indices at 2,088.18. The top gainers were CNI Leasing, Unity Bank, and Veritas Capital. While on the other side, we had Dangote Flour Mills, Eternal PLC, and Prestige Assurance Company PLC dropping the most. And before we go for our short break, let's quickly review a bit of some of these earnings. FCMB first quarter results also trickled in this week, and FCMB as earning actually came in at the midweek. Basically, the Q1 2018 earnings for this week saw the top line and bottom line performances coming in largely in line with analyst estimates. Gross earnings and profit after tax rose 10% and 64% year-on-year, respectively, to 42.2 billion naira for gross earnings and 2.6 billion naira for the profit after tax. Analysis show that the results came in weaker on a quarter-on-quarter basis, with top and bottom lines dragging 17% and 34% respectively, contributing to year-on-year top-line growth. Interest income came in line with Vetiver analysts' expectations, which rose 9% to 32.6 billion naira, despite a notable 10% decline in loan book to 595.8 billion naira. Now to the cement company of northern Nigeria. The Q1 earnings of that company also came in this week. The company reported a jump in earnings, largely supported by a decent top-line performance, which rose 24% year-on-year to 5.4 billion naira, slightly beating estimates of 5.2 billion naira. The top-line performance was a bit mixed, of both higher cement pricing and volume, with the price supports particularly higher than expected. Gross profit rose 39% year-on-year, despite some pressures from energy costs, with operating expenses moderating at 8% year-on-year, and the EBIT doubling year-on-year to 1.4 billion naira. And for Nestle, Nestle's first quarter 2018 financial statement shows a 10% year-on-year rise in revenue to 67.5 billion naira, ahead of Vetiver analysts' estimate of 63.6 billion naira. And the strong top-line growth at the start of the year was impressive, given that the first quarter 2017 was a high base period. The growth was mainly driven by a 17% year-on-year rise in the beverage segment, Milo, as well as a 7% year-on-year growth in the food segment. However, gross margin came in at the lowest level since the first quarter of 2017 at 38%, weaker than analysts' projections. Now let's go on a short break, and when we return, we'll continue with the diary of the stock markets for next week.